right, well, I want to thank everybody for coming to the Hemp CBD Connex, brought to you by the Cannabis Collaborative Conference. I am Josh Kincaid. I'm a capital markets analyst, and I'm a host of a cannabis business podcast called The Talking Hedge. I'll be your moderator today. I'm excited about the Hemp Lab. We have a lawyer, accountant, and banker here today. And so starting right off with Katrina Glogowski, she's a compliance officer with Connex Trade. Katrina is an attorney with over 20 years of experience in regulated markets. She's also an angel investor with a dozen investments in cannabis and cannabis-related businesses. Katrina also serves on numerous boards for cannabis-related companies. In connection with her investment in Kush.com, she serves as the compliance officer at Connex Trade, and Katrina is a frequent speaker on legal and compliance topics in the cannabis and hemp industry. Katrina, thanks for being on board.
Thanks, Josh.
And then the accountant on the panel is Danny Espenda. She's a tax and cannabis consultant. Danny is a principal with ACT Resources, specializing in tax compliance and planning for individuals, partnerships, corporations, as well as financial accounting and reporting and QuickBooks consulting. She has extensive experience in medical and recreational cannabis with clients around the country. She also has experience with hemp and CBD businesses, manufacturing, real estate, professional services, and construction. Danny is a member of multiple accounting and cannabis industry associations. She's presented at numerous tax, legal, and cannabis conferences around the country and has conducted workshops for clients in the industry. Danny, thanks for being here.
Thank you. Good to be here.
And Carmela Houston, she's a founder at High Risk Business Solutions. Carmela retired as a vice president of business services for Solal Credit Union in Seattle, where she created and managed Solal's business service division, including a portfolio of commercial loans and 350 plus business accounts and over 150 cash management analysis accounts with a team of 8 folks. Carmela initiated niche market opportunities, including banking, state, licensed, and regulated cannabis businesses, including being one of the first financial institutions in the nation to openly lend to the industry. Carmela, thanks for being with us.
Thank you, Josh.
So Katrina, how are companies avoiding logistical nightmares when shipping or transporting hemp and its derivatives? Reason why I ask is because Customs recently seized glass bongs and pipes bound for Washington State's regulated marketplace. And separately, a company sued the Idaho State Police over the seizure of 7,000 pounds of hemp last year, mistaken for cannabis. And then just last month, the New York City Police Department seized over 100 pounds of hemp accidentally. So how are companies avoiding logistical nightmares when shipping or transporting hemp and its derivatives?
Well, Josh, there's 2 answers to that question. The first is do it transparently. Do not try and hide your hemp, your derivatives, your isolates. Disclose. It's always better to disclose. The second answer is there's guidance out there for you on how to properly ship hemp and its derivatives. The United States Postal Service has issued a written opinion relating to the requirements of how to ship hemp. You have to have a valid address, so don't fake your address. You have to ship it to a valid address, don't fake the address. You have to include the certificate of analysis, the COA, so that if it does get seized, they can tell what it is. And you just need to make sure, of course, it has enough postage. What we see a lot in the industry is products are getting seized and or diverted. We've even seen some inspections that result in theft because sometimes people don't know what they're inspecting. So I would also recommend that you insure your product. And then if you're not going to use the post office, which is my recommendation given the written Attorney General opinion authorizing hemp to be shipped, know who your carrier is. FedEx, if they know that you are shipping cannabis or hemp, they will seize it and destroy it. UPS, on the other hand, has said the post office has said it's okay, so it's okay for us. DHL will also ship. So just know who your shipper is and know what the regulations are.
All right, Danny, I've got a double question for you. I want to know about hemp companies, if they have an option of cash or accrual accounting, and if companies are forced to operate all in cash, if there's a tool they can use to determine if fraud is occurring. There's a lot of cash in the industry, so since the passage of the 2018 Farm Bill, CBD products have exploded in both popularity and retail presence. Retail sales of CBD in the U.S. was expected to surpass $1 billion in 2019, a 133% increase over 2018 sales, and it might eclipse $10 billion by 2024. The U.S. hemp sales could increase by as much as $25 million this year, almost reaching $65 million next year, and or more than $100 million by 2022, according to new estimates by the U.S. Department of Agriculture. So, Danny, with all of that cash, do hemp companies have an option for cash or accrual accounting?
They do. So I think the misconception here is that picking accrual accounting cash versus accrual accounting is actually a method of accounting. It doesn't have to do with the cash management. But it is a good question because there's been some recent changes dating back to 2018 that were not only good for hemp and CBD, but also good for marijuana. And that change was that they can operate on the cash method of accounting, which can simplify some things for them as far as bookkeeping and accounting purposes. But when it comes to managing the cash, that is kind of a difficulty with a lot of businesses. Whether they have access to banking or not, I've noticed that a lot of our clients in the industry, particularly on the hemp and CBD side, might have trouble getting some banking. Unfortunately, and Carmelo will probably speak to this a little bit better, but the hemp in particular has had a lot of trouble getting banking. So they're forced to operate their businesses in all cash. And of course, as Josh already mentioned, that can create a host of other problems. So without access to banking, there's several things that occur. There is the increase of theft because there's cash laying around. It's not necessarily laying around. Sometimes it's in neat little stacks in a room before it gets to the safe. But there's a lot of cash. And when you're working in an industry where employees are not, necessarily paid well, they are paid well, but they might have a lot of financial pressure. It creates a situation where they will have, I guess, a higher instance of maybe wanting to take some of that cash and misappropriate that cash. So for a company to have a good set of cash management policies that are well thought out, segregation of duties is really important. They're in these businesses, a lot of people are bootstrapping it, trying to do things on their own. And what we find is that there is somebody in the business that has access to too many areas of cash or too many areas where they can conceal or misappropriate cash. So it's important for not only the company to have a good solid cash management policy, but also have a theft policy and good policies with employees so they understand what those policies really are and what happens if something happens. They could lose their job or, most likely that's generally how it goes. It's difficult for employers to prosecute people that steal cash. It's difficult to prove. Obviously with cameras and things like that, there are instances where you can actually see the employee pocket the money or, do what they're going to do with it. Sometimes it's product. It's not always cash. It's any asset of the company. It could even be paper. Well, that's not necessarily an asset, but computers, other things. It's not just the cash itself. But I took a really interesting class on fraud a couple of months ago, and what they talked about in that class, I've been repeating constantly with my clients, and that is trust your employees, but verify everything.
That's good advice.
Yeah.
All right, Carmela, I have a question for you. Also, two questions here. First, I want you to briefly clarify what the current banking options for hemp and CBD businesses, and then I want to follow up asking about how accessible banking services will affect the lending landscape and hemp industry overall. And that's because the Federal Reserve Board, the FDIC, the Financial Crimes Enforcement Network, the Office of the Comptroller of Currency, as well as conferences of state bank supervisors, they all filed a joint statement notifying banks that they're no longer required to file a suspicious activity report for customers who grow hemp in accordance with applicable laws and regulations. In addition, the FinCEN said that they will issue additional guidance to banks after reviewing and evaluating the USDA's interim final rules. And yet there's still a lack of clear federal banking regulations and uncertainty from the financial institutions. Hemp and CBD businesses are also finding that while one day they may have access to services such as credit card payments processing, the next day there could be issues. So can you briefly describe or clarify what the current banking options are for hemp and CBD businesses?
Sure. So, banking options. Some of you were in the room earlier and heard the confusion between CBD and hemp versus cannabis, and I'm sure that a lot of you were probably very enlightened by the discussion that went on. Think about trying to translate that same discussion to a bunch of bankers, let alone their board of directors, and in addition to their regulators. So you guys are in the business, and you know how confusing it can be to try and distinguish the difference between, hemp versus cannabis versus, CBD, and it's very confusing. And the regulations are still very vague. You have federal guidance that's out there, and you also have competing state guidance, where federal guidance isn't necessarily quite in place right now. So, due to those reasons, banking options are still limited for hemp and CBD companies. It's still a gray area. It's still a new market. It's become legal hemp is legalized after 80 years. So there's going to be a lot of changes going on, and it's up to each financial institution to determine what type of accounts they're going to serve on the business side, and what they're going to target and what kind of risk they're willing to take on. Some financial institutions, including my former employer, L.A.B Credit Union, decided they were going to openly bank the cannabis industry. They also openly bank the hemp industry and CBD industry. They're one of the few. There's several other financial institutions in Oregon, Wana Credit Union, MAPS, and then L.A.B's also in Oregon, as well as Washington. Washington, there's Timberland Bank, L.A.B Credit Union in Numerica. I honestly don't know if they have a program designed for the hemp and CBD industry, and I've heard that Chase may bank the hemp industry, but again, it's a little vague. And in reference to the new FinCEN guidance that came down, basically what it said was that you don't have to file suspicious activity reports on hemp businesses like they did for cannabis businesses. With cannabis businesses, when someone opens an account in the cannabis industry, there's an initial suspicious activity report that has to be filed to the federal government. And then every 120 days thereafter, you have to continue to file that report on that business, basically stating that yes, you continue to bank that business and everything is good and fine. There's no issues that you've noted. But it's also in that guidance, it says that the financial institution is responsible for understanding all of the regulations that are in place in each state and local jurisdiction where that business occupies. And that's a lot of regulations to understand. If it's just a financial institution that's banking one small community, that's one thing, but when you're banking several states, that's a lot of different regulations and oversight to understand. Where does the USDA come in versus the OLCC versus the Oregon Department of Agriculture? So there's a lot of different nuances in place. There is banking options out there, but they're probably going to be more expensive than what you would be able to walk in and to a regular bank and just open a regular business account. And that's because of the additional scrutiny that is required of those accounts by the regulators on the banks. So, and in terms of the lending landscape,
So that question was, how will accessible banking services affect the lending landscape in hemp industry overall?
so right now I don't know if if any of you have loans in the hemp industry, if you've been able to obtain an actual business loan or an agricultural loan from a bank, more power to you. It's pretty rare. There's 1,800 banks that specialize in agricultural lending in the country, and none of them, to my knowledge, are banking the hemp industry openly. And it'll be a while before that comes online. Agricultural industry, as you know, is very risky. If your crop goes bad, or if, as we heard earlier, if it is higher than the 0.03 in THC, you lose your crop. And to a lender is going to lend money based on cash flow. You have to have positive net cash flow in your business and reflect that for at least 2 years on your income tax returns prior to them even considering to give you a loan. Secondly, they're going to look at collateral. What collateral do you have to lend on? What can you offer that the bank could get repaid on if you fail to produce a sufficient amount of cash flow to repay the loan? And if it's the crop that just, you had to destroy, that's probably not going to do it. So your best bet from a lending standpoint, if you're trying to build up your business right now, is to either self-fund it with your own personal resources. What I've seen successful in some companies is they'll take out the business owner will take out a home equity line of credit against their house, and then they'll lend the money to their business themselves, and then pay that back over time. And that way there's some tax advantages to doing that. Or a personal loan. You can take out a personal loan from a bank and then do the same thing, lend the money to your business yourself personally. There's friends and family, or there's private money lenders. They're going to charge you interest rates probably well over 10%, sometimes even into the 20% range. They're usually shorter term. They're very expensive, and they want a net return. Typically, most companies in this industry are a little too young to go for venture capital financing, but some do. Usually what you're giving up then is a percentage interest in the actual company itself. So you're giving a portion of your ownership interest to somebody else in return for that capital. Again, it's still just a very young industry. The regulated side is very young still, and there's a lot of things to be worked out. It will come around, but it's going to take some time.
Young and volatile. So Katrina, what advice do you have on how to prepare and stay ahead of a volatile regulatory environment? So going back to 2017, Washington State saw gummy bears being banned because its shape was deemed to be too enticing to children, too attractive. So during the fourth quarter of 2018, Washington State tried to implement rule changes that would affect the shapes and colors, and that would impact 70% of the market and would have resulted in higher compliance costs and lost market share. Fast forward another year, fourth quarter 2019, Washington banned CBD beverages, and then hemp cross-pollination became a reality. And then after industry officials complained that the regulators had been heavy-handed in their oversight, Washington regulators are now recommending changes in their enforcement policies, and yet there's a bill gaining traction right now that would limit concentrate percentage to 10%, essentially nullifying the designation as a concentrate. And there might be some folks in the room that remember when the OLCC banned all concentrates that had solvents. Rosin was the only product that could be sold in 2015 in Oregon. So you kind of have to constantly battle these potential changes. So Katrina, assuming companies in emerging hemp and CBD markets are learning from Washington's Petri dish experiment, what advice do you have for how to prepare and stay ahead of a volatile regulatory environment?
Read. The practical advice is get on every single listserv that you can. These are government entities. They are required to announce regulations, announce changes. Sometimes they have public hearings, sometimes they don't. Get on industry publication listservs, get on every mailing list that you can. And the goal is you want to find out about a regulatory change before it affects your business. Every single person in this room is aware of the USDA final rules, which are horrendous. However, they were published at this point 60 days ago. So if you are prepared, then you have advance notice of the total THC rules versus Delta 9 THC rules. And in fact, Oregon, the state of Oregon, made that regulatory change even before the USDA. And you need to just stay on top of it. And it can be a challenge. I do all 50 states, and there's a change a day. And that's not even the federal government or the Canadian government or the import-export rules or the shipping regulations. You can hire an attorney and handle it that way, but quite frankly, even your attorney is going to struggle to stay on top of it. So my best advice to you is just sign up for every listserv you can and get as much advance notice for the changes that are going to affect your business and may in fact affect the crop you have in the ground. And just get as much notice as you possibly can and try and stay abreast of it.
All right, Danny, I've got a question about trying to maximize cost of goods sold to enabling a portion of your certain cost to be converted into inventory. So labor for any business is generally considered the highest percentage of cost of goods sold, making it even more painful for cannabis companies who can't write off those expenses due to 280E restrictions. And just by comparison to how many businesses there are, locally here, there's 172% more Portland cannabis retail stores than Starbucks and 9 times more stores than McDonald's. So, Danny, would you recommend hemp and CBD companies use Section 263A to maximize cost of goods sold, enabling a portion of certain costs to be converted into inventory?
Sort of. So, when it comes to manufacturing accounting, I spent my entire school career avoiding cost accounting, and then I ended up in the cannabis industry about 6 years ago, and now it's all I do. So I think it's some kind of cruel punishment. but so when it comes to marijuana in particular, and I know that CBD and hemp kind of fell under that umbrella for a long period of time until the hemp farm bill, that it was subject to 280E. But for farmers in particular, so those that are farming hemp, you're less impacted by 280E, or you were less impacted by 280E. Fortunately now, as long as you're under that 0.03% THC level, you're not subject to 280E. So it's less of a concern, but I know that those fluctuate. So there might be times when you are subject to it and when you're not. So I highly recommend using some form of cost accounting. The Internal Revenue Code that governs all this is IRC 471. So with 263A, they're very similar. And so a lot of people don't really know the differences, but with 263A, it's actually required for some companies. They have to be over a certain, once they reach a certain income threshold for, they use a 3-year average to determine that. You're forced to use 263A. And what 263A is you've got your, your direct costs, your indirect costs, and other things. It requires the company to capitalize some of the general and administrative expenses that normally would be expensed in their business. It forces them to kind of capitalize it to inventory, so there's a better matching of income and expense. But in the cannabis industry, it's not allowed because you can't make something a deductible item. So if we capitalize these costs to inventory, and then when the product is sold, expense it through cost of goods sold, you're not allowed to include non-deductible items in there. And unfortunately, general administrative expenses are in that non-deductible category. So that's why 263A is kind of less applicable. 471, very similar to 263A. And in fact, if you take the numbers out of it, they almost do the same thing. But with 471, there's a certain method and certain expenses. There's direct expenses, indirect expenses, and then there's different categories. I won't bore you with all those details, but that is how you maximize your cost of goods sold. And the good news with the hemp industry is that if your crop is below that 0.03 threshold of THC, or if you're selling CBD products, and make sure that you properly source those products, that you're not subject to 280E. So using 471, 263A is less of a concern. This used to be the concern before the hemp farm bill passed, because your businesses were subject to that. Hopefully that was a good answer.
I want to know a little bit more about how this is going to impact loans and what account holders can do to protect themselves. So the reason I ask that is because starting this year, cultivators licensed under federally approved production programs will have the same access to federal loans, crop insurance, disaster assistance, and conservation programs that farmers of other commodities have had under the U.S. Department of Agriculture's various agencies, just in time as the USDA estimates that 20% of the hemp lots will be hot, exceeding that THC limit, while 41% of Arizona's hemp plants already tested above that limit last year. So how is that going to impact loans, and what can account holders do to protect themselves?
Great question. First, I don't think the USDA is going to just open up lending to the hemp industry right away. I think that's their long-term plan, but again, typically to get an agricultural loan or any type of loan from a financial institution, whether it's guaranteed by the federal government or not, you have to have at least 2 to 3 years of profitable business in order to qualify for that loan. So a financial institution is going to want at least probably 3 years of your tax returns, as well as 3 years of profit and loss statements. If there's differences between your tax returns and your profit and loss and balance sheets that you prepare internally, or that you have a bookkeeper prepare, they're going to want to talk to your accountant to understand what those differences are, to make sure that basically they're being able to follow the clear cash flow all the way through. It's not just your net income, but the actual profitable cash flow that you have coming out of that business. That's what's going to repay the loan. And I think it is, collateral is going to be the other thing. Given the variance in the regulations right now, I think the USDA is going to be very hesitant to lend on hemp as an agricultural crop product initially, until all the regulations are settled out and fine-tuned, and they see some history behind the success of those crops and the business venture in general. And keep in mind too, when a financial institution is looking at lending to you or opening an account for you, they still have to follow all the BSA, which is Bank Secrecy Act compliances, as well as anti-money laundering. They have to file currency transaction reports. As you know, it's still very much a cash-intensive business, and so if you deposit more than $10,000 in cash, a currency transaction report has to be filed with every single deposit. So that's a lot of time and energy and paperwork, and so I think that more financial institutions will eventually step up to bank the industry once they start to understand it more, but it's all about education. And you can help your banker become educated on your industry as well.
All right, on that same note, Katrina, want to know about how companies can protect themselves from legal protection. There's a lot of lawsuits out there. Most notably, you can see the Canadian cannabis giant Canopy Growth and Nevada-based hemp producers are suing each other for $1.9 million in rival federal cases over a bad crop and allegations of mispayments and misspent advances. And separately, a Kentucky-based CBD company filed a $44 million lawsuit against an Oregon company that claimed sold it nearly worthless hemp seeds that ruined a giant crop last year. And then the FDA stated back in November that CBD is generally not recognized as safe, and then warned 15 companies marketing unapproved cannabidiol, claiming of stress relief and management, pain management, insomnia. So how can companies protect themselves from potential lawsuits while staying in compliance in an industry that has perpetual potential changes?
This is a tough one, and I have to tell you, whatever business you're in, if you're going to sell this, you can get sued by anybody for any reason at any time. Oh, I poked myself in the eye with it. Okay, now I'm going to sue you. The more important thing for the CBD industry is to enact quality control. Know what is going in your product. If your product has a sticker on it that says that there's 10 milligrams of CBD in this chocolate bar, make sure there's 10 milligrams in it. If you are trying to take a shortcut and dilute your product or not put 10 milligrams in there, somebody is going to figure it out and somebody is going to sue you. If you are brave enough to put on your CBD infused chocolate bar that it cures cancer, I will sue you. That is dumb. Number one, it's against federal law. And so if you have the cojones to put on your website that this chocolate bar is going to cure your eczema or your cancer or anything like this, you should not be in business. We see this time and time again where people are making asinine claims. If you really want to say that your chocolate bar cures cancer, you would better hire an attorney. Now, the flip side to it is how you can stay in compliance. And one of my little tricks, hints, wink, wink, nod, nod, is you put your CBD infused chocolate bar on your website and you say, it is tasty goodness. You don't make a single claim. It doesn't help with sleep. It doesn't ease pain. And it sure as heck does not cure cancer. Your business says it is tasty goodness. And then you allow people to write reviews for your tasty goodness chocolate bar. And reviewer number 1 says, I took 2 bites of this and slept like a baby. The FDA is not going to come after you if a reviewer says you slept like a baby, because you're not saying it. You are not making a claim. And your package certainly doesn't say sleep aid. A second reviewer says, I have really nasty eczema and I put this cream lotion on my leg and my eczema went away. Good for you, yay. You, the manufacturer of the cream lotion, did not say it cures eczema. You, the manufacturer, did not say this product treats eczema. So, as a manufacturer of goods, if you're making a chapstick or a tincture or a chocolate, you can control this. The way you control it is if the package says 10 milligrams, it had better have 10 milligrams. And if it is 0.03% or less of THC, if some person tests it, it had better turn out to be 0.03% or less of THC. Those are the things you can control. And then lastly, and I say this all the time, and one of these days at one of these conferences I'm going to run into this person, so hopefully not today. If you are the person making CBD infused leggings, please, you are not helping this industry. You really are not. And to sum up, if you're going to make a product, whether it's a pen, whether it's a microphone, or whether it's a CBD infused chocolate, Just do it right. Do it right the first time. So when somebody does sue you, you can hold up your package in front of the jury and say, I never said it cures cancer. I said it has 10 milligrams of CBD in it, and it does. I said that I got the CBD from the farm out in Bend, and that's where I got it. I said it's organic. How can it be organic? All of the materials I put in it were sourced from organic resources. Simple. But that advice goes to any business. Doesn't matter. This is a pen. Click it. It should write. If it doesn't write, I'm going to be an upset consumer. So just remember, anybody can sue anybody for anything at any time, for any reason. And this spate of litigation is very concerning to me. Charlotte's Web is one of my biggest concerns, the class action litigation in California against Charlotte's Web, because we all look to Charlotte's Web as a reputable brand. And if you look at Charlotte's Web, they never said their product cures cancer. Never. The litigation in California involving Charlotte's Web is they are not FDA approved and therefore should not be for sale in California. That's a totally different lawsuit than somebody claiming that their CBD infused leggings gets rid of cellulite and cures cancer. So we want to track that Charlotte's Web case very closely because Charlotte's Web is in danger there, and we don't know what's going to happen with Charlotte's Web. But again, it's a business. Be prepared for litigation, and be prepared to defend against litigation. That's the way it is. Welcome to America.
All right, Danny, I wanted to ask you about a tax question surrounding CBD and ancillary shops. So the daily foot traffic through mainstream retail outlets now selling CBD dwarfs that of traditional CBD outlets. These super centers are seeing 25 times as many customers per day as a recreational cannabis store. So the retail outlet competition, as well as maybe the Section 280E, may have caused cannabis retail shops to open adjacent stores to sell CBD and ancillary products in order to avoid higher cannabis taxes, which they're in upwards of 37%. So is it your opinion, or what do you think? Are the additional overhead expenses worth the tax savings, or is this simply a real estate investment strategy to secure future cannabis lounges?
That's a great question, and I'm going to say hard no, that it's not worth it. And the reason I say that is a lot of retailers in particular, they're the most impacted by 280E. They're not doing any manufacturing. So when Josh mentioned earlier, labor is the biggest cost in your business, that is not something a retail shop owner can really deduct. So they pay a much higher than normal tax because their tax is based on their gross profit and not their net profit. So there's been a lot of strategizing and how can we cut down, on these unfair taxes. So it's a pretty common practice for a retail store to decide that they wanted to open an adjacent store or a store nearby and utilize that strategy. Maybe, put their ATM over there. Obviously now that CBD and hemp is, we've seen a huge explosion in the last few years on those products. They're carrying a lot of those things in addition to t-shirts and hats and other things. In some states, you're allowed to sell those items within your cannabis retail store or dispensary. In some states, you're not. So this was a pretty common practice. But there's been recent audits where the IRS is sniffing around. And basically they've decided that if that business is a very small percentage of your cannabis business, that you just set that company up to cheat the government. And so now we're noticing that strategy is being very closely scrutinized by the IRS, and in a couple of cases where there were audits, they made both companies subject to 280E. And the disaster about all of this is most of these companies are losing money. And so when you couple the added expense with the disallowance of a lot of the deductions, people will put advertising and some of these non-deductible items, even labor. I've seen people try to book their labor there. It's not going to work with the IRS. And so you may be in a situation where you thought it was a good idea, and maybe 3 years ago it was. I think, when you hear every panelist and almost everybody talk in this industry, things are changing all the time. So what I tell my clients is what worked 3 years ago doesn't necessarily work today. So, when you're talking about a management company or an IP company or something like that, we're actually unwinding some of those because I feel that it's in the best interest of our clients to avoid some major tax problems down the road.
That's a good way to pivot to this last question. Carmela, do you think that some of these credit card processing and money transmitting services will survive and stay relevant after banking services become readily available? So credit card processors and money transmitting services have been self-proclaimed as the banking solution, and yet very few have worked to gain approval from Washington State's Department of Financial Institutions, which is the second most strict behind New York. So do you think they'll pivot to stay relevant after banking services become readily available?
I think some of them will, and some of them won't. The Visa and MasterCard just put out issuance. Let me back up for a second. First of all, if you're taking credit cards and you're paying with your credit card, you're going to, say, Safeway, and you're running your credit card through a machine. That's literally just a point of sale system. They're not processing the credit card for you. It's just the point of sale system, and that's what's being sold to a lot of retailers in the industry. But the processor that's actually processing the transaction on the back end, those are typically owned by large, federally insured and chartered commercial banks. L.A.B is one of the largest processors, and it's owned by a federal chartered U.S. bank. And it brought on a lot of folks through these various different platforms, and then after they set everybody up, they decided, oh no, the risk was too much, and they closed everybody down. So everybody that had credit card processing, lost their credit card processing. There are a few solutions out there that are relevant right now. Typically they run through the ACH rails, which is the automated clearinghouse rails. So it doesn't run through the Visa and MasterCard rails. It runs through, basically it's like an automatic transfer. Like if you were to transfer money from your personal bank account to pay one of your bills, like your electric bill, it's an ACH transaction. So those transfers are typically what are in place now. Most of those point of sales systems do have the ability to pivot when credit card processing really does open up. Visa and MasterCard, well, some of the other companies were processing through European banks and or offshore companies. Visa and MasterCard just came out in December with a rule that said, okay, if you are going to process through a European bank, you have to have a physical presence in Europe. And so that put a lot of other folks that were processing credit card transactions through a European bank out of business as well, or at least deterred what they were doing on the credit card side. Some of them have shifted and are doing the ACH side. But if you are being approached by someone that's going to offer you credit card servicing, make sure that you look at it very, very carefully and understand and ask the question, who is doing the processing? Where is the credit card processing being done? Make sure that you know that, because otherwise what's going to happen is your account will be shut down, it'll be flagged, shut down, and then you may have a hard time getting an account when credit card processing does become available. So the ones that are offering it through the ACH rails, I think will stick around. But if they're offering credit card processing and it's not a fully transparent process, they probably will not.
All right, well, that's been exactly 45 minutes, so if anybody has any questions, you may step up to the mic and ask away. Are there any questions in the audience?
So Salal Credit Union, who I used to work for, they do bank hemp businesses in Oregon. And actually, Michael McIntyre is our Oregon representative, and he's just sitting behind me.
Okay.
I'm sure he'll be happy to give you a card.
Thank you.
Yeah, two questions, I guess, related to legal. You had mentioned if you had your product out there and you had a message board under there. Well, if you have a message board, aren't you publishing yourself a statement? And if you're moderating that message board to get rid of people are just being trolls and such, you're kind of highlighting those statements. Would you think there's some difficulty with that whole, let your customers say the things that the FTC or whatever would have an issue with?
Well, first of all, it's not your company making the claim. And I assume you wouldn't put such a claim on your packaging. So the FDA cares about the packaging in your website. Secondarily, your website should have a disclaimer in neon flashes, bold, underlined, italics, print that says the FDA has not evaluated this product, etc. And so, excuse my language, but I call it the bullshit test. So when you're standing in front of the judge, you say, my product doesn't say this, I don't say this, my website has neon flashing, not FDA approved, I can't control what people put on there. They say, well, you moderate it and you allow them on the website. But I don't think the FDA is going to come after a company for a consumer review. The FDA enforcement actions in November and December against the 15 companies that Josh mentioned earlier, the companies themselves were stating that these products cured all these diseases. So I think if you take the consumer review route, you're safer,
Okay.
not guaranteed.
And how about liability insurance? Is it anybody, is it available, and what are the difficulties in obtaining it, and where to go?
As a lawyer, I would highly recommend you get whatever insurance you possibly can. It would be very difficult to obtain product liability insurance for a CBD product, given the fact that it's not FDA approved. But if you can, I'd pay through the nose for it to get that. I do not know anyone, any insurance carrier, that is going to write policy for a CBD product, though.
Crop loss insurance is available through Worldwide. Norm Ives is a national insurance salesman. So Norm Ives with Worldwide.
Thank you for posing that. So GAAP accounting is, well, GAAP stands for Generally Accepted Accounting Principles. And these generally are financial statements, or it's done on the GAAP method of accounting, lots of rules of the timing of deductions and income and other things. And if you want to file on the accrual method of accounting, it's really the way to go. So, you know, understanding the rules of GAAP accounting, you know, it's very complex, hire a pro. But if you file on the accrual method of accounting, you're going to end up with more deductions that way. But there are some companies, if they're below a certain income threshold, they are allowed to deem their expenses, you know, kind of their everyday incidental type expenses that are directly related to production, that they can expense them immediately. So it's less of an issue now than it used to be. They raised the income threshold on that, so it used to be much lower. So now many cannabis companies in particular can file on the cash method of accounting, and it's okay. But your question was, you know, talking about how we can take our direct costs, and really the GAAP accounting is more on the indirect costs. And those would be things such as, you know, insurance and let's see, direct labor, rent and things like that. Rent would be considered an indirect cost, but it is absolutely incidental to your manufacturing process. You can't manufacture outdoors. It just doesn't work. So, matching a certain portion of rent to your income is generally the way to go.
Well, with that, I'd like to roll this one up. I'd like to thank, on behalf of the Hemp and CBD Connex, brought to you by the Cannabis Collaborative Conference. Appreciate you guys being here. I want to thank the panelists for the Hemp Lab, the lawyer, accountant, and banker. Lawyer being Katrina Glogowski, compliance officer with COGS Trade. Danny Espina, tax and compliance business consultant with Act Resources. And Carmela Houston, our banker, founder at High Risk Business Solutions. Thank you all so much for being here. Thank you.
Have a round of applause for Josh. All female panel together of experts. Good job, Josh.
Thank you, ladies.
We do exist.